Hey guys, this is Market Update. In this video, we're going to talk about certainty versus uncertainty. In crypto, it seems like people are very uncertain about how things are going to go. The economic data is getting weak. The Fed is still pretty hawkish, but I've never been more certain about what's going to unfold over the next 12 months. So let's talk about that. In terms of the Bitcoin price, we're actually just consolidating at this point. It's a boring summer consolidation at this point, and the next catalyst is probably not going to turn out for another few months. So just get ready for some boring price action. You can see here, this consolidation before this entire move was literally 32 weeks of mind-numbing price action. We might get that again. We're only at week, 15, I think at this point, 15 weeks here. So, it's not even like a very large consolidation. In fact, if you take this trend line up to the all-time highs, we haven't even broken this uptrend yet, right? We recovered from this sell-off, and we're still in this uptrend. Now, may not happen because really the Bitcoin price is going to move off catalysts, which may not come for a few months. So if we just have kind of this uptrend or even just this sideways consolidation and saying, look, we could trade in this range, and the next catalyst is going to be the Fed coming out and saying things are done, or if inflation readings keep being very soft, the Fed is going to have to eventually get dovish, right? Because everything's starting to contract. That's where I see things. I want to talk about the longer term and this cycle. Probably got another 12 months or so. And that will be the end of the bull market if we're looking at cycle theory. So it's really important. If you do trade, check out Bybit. The link in the description can get you up to $30,000 as a deposit bonus. You can check the link for the details down below. I still think it's time to buy consolidations and buy dips because this is the cycle that we're in now versus the others. Post-halving, each and every time has been very, very good for the price. Now, the Fed is being a bit crazy with its dot plots and everything. We can ignore that. We know that the economy is starting to weaken. The data is showing that. And so over the next 12 months, data is going to get a bit weaker. If it gets really, really weak, they will cut aggressively and print. And if it gets mildly weak, then they'll just slowly come down. Both of them are pretty good for an asset that has more fundamental growth than most other things. This is the next 12 months, right? I think. So we've got day 300 to day 500. That would probably be a peak in the bull market, which would be, another 12 months or so. So any consolidations here, I think we're in a good position. You can see Bitcoin true hash rates actually leveling off here. Might be a reason for the sell-off or just some consolidation here. Maybe some miners turning off, maybe some Bitcoin selling. But it always happens after the halving. It's totally normal. This is Bitcoin versus other assets you would invest in, right? So Bitcoin year to date isn't the best performing. I've actually got Nvidia up here. It's by far and away the big winner. But you can't put all your money in one stock. Bitcoin is more of an index. I think it's the World Financial Index as its money. And so it is the best performing of the indexes. It's up 50% year to date. But look, we've gone sideways since March. We're just in a big consolidation for BTC. The narrative's gone, right? The ETF narrative, all that's out the window. And you need the next one, which is going to be Fed action, which may not come until later in the summer, early autumn. That's the next narrative where you get attention back in and then you can get the move. Nvidia has the attention now, but that's trading versus putting your money in the best performing asset, which, Nvidia is one, Bitcoin is another. And look, these are great performing assets. Microsoft, Apple, S&P, NASDAQ, great too. But as an investor, you're looking to put probably the majority of your portfolio in something steady long-term, and it has outperformance over your investment time horizon, 10, 15, 20 years, whatever it is. Well, Bitcoin is the large index that has the outperformance versus S&P and NASDAQ. So if you want to get 12% year-to-date performance in the S&P, it's not bad. You want to get more like 20 in the NASDAQ, great. Bitcoin is as big as those. It's an index, and it's still got massive outperformance. So it has to be part of a portfolio. If you're not in BTC, you're not getting that outperformance. You're actually underperforming because this is an asset that is becoming more ingrained in portfolios. So if you're not in it, you're actually underperforming those that are now starting to get involved. So that's how I see things. It still has the outperformance. A lot of people are confused with what the Fed said this week, considering all of the data is coming in much softer. I think it's really just too early for them to start coming out and saying we're going to cut. And that's why their dot plots actually moved up this week, even considering that all the inflation data is lower than they were expecting and the market was expecting. Why is that? It's just too early for them to start to come out, because if they tell people, hey, we're thinking of cutting, that's basically like a rate cut, right? Because the market says, okay, you've told us you're thinking of cutting. That means we know you're going to cut, and so we'll price it in right now. So they don't actually want the market to price in that before they want it to happen. And so that's why they're kind of basically, they're just lying, right? They're just pushing the dots up and saying, no, we think rates are going to be high. They don't actually think that. They're just making sure that the market doesn't price something in that they don't want right now, which is they just want the market to kind of stay still right now. We've had a lot of easing. Markets are at all-time highs, right? But they don't really want to let things go further right now, right? They want that data to come much weaker before they let the market price that in. In any case, look, the market's not doing too well and the economy is not doing too well, right? The US is running a huge deficit and GDP is basically bumbling along, right? It's not. So that is not a healthy economy, right? S&P equal weighted, you can see it's not going anywhere. And you have market cap weighted, which is the tech stocks, right? Just pulling everything forward again. That's the bright light, but the rest of the economy is pretty flat. And so what the Fed wants to see is more of that, inflation coming down, and maybe they can talk about cuts later, but there's no panic for them to start doing that now and having all that priced in right now. This is manufacturing versus services indexes. This is the ISM. So anything 50 or above is growth. Anything below 50 is contraction. So what we want, the best outcome for what the Fed is trying to do here is a slowdown in manufacturing and services staying somewhat around 50 or above 50. That would be a slowdown, but not a recession. A recession is when both services and manufacturing go below 50. That's a really bad spot to be in. Now, if that happens, Bitcoin is getting trashed short term. It's going to be sold off along with the rest of the market. But then the Fed comes in and they'll panic and print money and everything goes to all-time highs again. It's not about trying to trade this. It's almost impossible. You just have to be in the asset that protects you from everything that's happening the best. And that is usually S&P, NASDAQ, and Bitcoin outperforms those. So this is actually fine. We have a slowdown. It's very clear to see. We needed that for inflation to come down and expectations to come down. But if services holds up, then it's going to be a slowdown, but not a recession. And that's ideal. It's on the Fed to how they want to play this and how they want to time this. They may want to drive services into a recession as well, just to make sure inflation goes negative. And maybe they want that to happen because they want to cut rates and they want to print money to buy bonds from the Treasury, who are running a 6% deficit and are totally broke. That may be actually what they want. So we have to bear that in mind as well. Rather than worrying too much about the fiat system, which is completely co-opted and controlled at this point, let's focus on the positives and what to actually invest in that has real performance. So I'd say American tech and crypto, right? The Fed, let's give them credit, actually have majority control over what happens in the economy because they have complete authoritative control over the money supply and the cost of money. So let's give them some credit that they pretty much control what happens short term. Proof of that is that during the pandemic, unemployment spiked to like 15%. They locked everyone in their homes, right? But still got unemployment down to 3.4% of the low, right? So they have a lot of control. So can they just loosen the market a little bit from 3.5% up to 5.5? Yeah, I think they can. That's a little bit of a looser market. They don't have to worry too much more about inflation. And the market will say, hey, look, you got to bring rates down a little bit. In any case, does it matter? Right? Does 5.5% rates, 3.5% rates, does that matter to an asset class that's growing at like 50 to 100% a year? Does it really matter that much? I don't think so. So as we can see, the unemployment rate is starting to move higher. Now, everyone in the macro world is scared. Well, will it go up another 2-3%? Yeah, it may do. There's going to be a lot of rockiness, but there are assets that outperform and we need to be in them, right? This is the inflation rate. It is coming down. This is rent, which makes up a huge part of the CPI. And you can see that the national rent index, which is real time, leads the actual CPI readings by about 5 months, right? So you've got this big spike, right? And then it started to come down. You see CPI actually price this in much later, and you've got a huge lag here. And so this is going to feed into the inflation rate over the next 6-12 months. So CPI is coming down, But again, CPI, it's just a fiat metric. It's not real. Real inflation is much higher. Real inflation in real goods and services that we need, right? So don't get your head turned about all this stuff. You can see CPI X shelter is basically at the Fed's target, right? So inflation is coming down. Rental index is going to be coming down, feeding into CPI. You can see goods and services here, all very, very soft. That's good news for the Fed. That's exactly what they wanted, and they have control over the market. They're going to do exactly what they want. But you don't trade that stuff. You can't trade that stuff. We just need to be in assets that protect us and help us and make our lives better, right? And so Bitcoin is that for the world, because it's really the only index that the whole world can invest in. Bitcoin's adoption curve, as you can see here, it is following the curve once again. Anything underneath this curve, buy. Anything above this curve, I still think if you've got a long-term perspective, you can see the curve as it goes out. 2 cycles, you have to be in at least 2 cycles with BTC, so that's 8 years. So think that far out. You've got it tracking up to 300 plus K in 8 years. The next cycle, which would be 4 years from here, maybe, I don't know, what's that, 200, something like that, maybe 180, right? So there's a lot of growth. It outperforms other assets, other large indexes. It's outperforming those, and it's still tracking on. We've come a long way from the bottom. I don't believe this is the top for this cycle, but you need to be in at least 2 cycles. We can talk about what you need to do at the top of this cycle. I think we have another leg here, right? Then it's starting to get very rich in terms of its trend. But anything near the trend, you have to invest if you're looking to save assets and actually outperform other indexes like the NASDAQ and the S&P. If you're a crypto course member, I've got some updates coming for you guys this month. There'll be a free update for you. I'll leave the link below if you haven't got the course already. There's 300 videos with free updates and the Bybit deposit link bonus down in the description. I'm James, this is Money ZG. Cheers for watching, and I'll see you in the next one.